Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 16th, 2021. As you probably have noticed, I'm recording this very late. It's Sunday, July 18th already, but I was traveling, so I could not have recorded this earlier. Alright, so let's get right to it. This is the program for today. The stocks ended the week on a somewhat weak note, but overall new highs were made. Junk debt, high yield bonds are moving higher together with stocks, so that's generally speaking a very good news. We'll look at natural gas as it pauses after a huge gain from a latest alert, and I'll give an example of my actual recent trade. This is a stock called GasLog Partners with the funniest ticker symbol, GLOP. Another big deal, I think, I actually posted on TradingView as well. This is a United States dollar is breaking into the bull market. So once again, the demise of the dollar has been greatly exaggerated. And also the inflation pressures are also, I think, really blown out of proportion. So we will look at the silver and see where this is all going. Another huge deal, I think, is Bitcoin has entered the bear market. And another thing, as I posted this on TradingView, I will show you my actual trade for Bitcoin as it is still open. And if you have my subscription services, I have two newsletters. One is called Elite Newsletter, one is called Speculator Newsletter. So in Elite, we cover mostly ETFs and large cap stocks and some Forex and commodities. While in the Speculator, we cover all kinds of really cool breakout stocks, and I'll show you one of the examples, actually, this GasLog GLOP from the Speculator newsletter. All right, let's get right to it. So S&P 500 again made a new record, actually two records. So last week, the week that just ended, we had July 14th, July 13th, we had two records set for S&P 500. Overall, nothing has really changed. We are still long. So if you have kind of longer term accounts, for example, retirement accounts, our signal was back in April of 2020, last year. So you can notice it on this chart. I use my indicator lines. You can look in the description of the video and see where you can get these lines. But basically, this is all I do. Once the stock, in this case S&P 500 futures, have closed above the blue support resistance line. Again, this is a daily chart, so notice D for daily. However, yes, you can trade things like futures, Forex on hourly or even minute chart, but I prefer to trade stocks, and stocks usually trade much better on daily charts. In other words, each of those candlesticks, each of those weird looking red or green bars, they are 1 day's worth of activity. Again, I can explain all of this. Technical trading is actually not hard at all. You can learn it. The technique is very simple. What's hard is the wrapping your mind around it and ignoring all the news and ignoring all of the hype and ignoring all of the opinions, especially of people who have no clue what they're talking about. Notice how big this move was, and notice again that our stop is at the blue line, and it was never touched. See this blue support resistance line? Since April of last year, we have not touched it. So in other words, if we opened back then in April of last year, we're still in this position. We're still long. Looking at the current price action, can we get a pullback? I think you know the answer to that. Of course, we can get a pullback. We don't know if it's going to happen today, if we don't know if it's going to happen in a week, or maybe it will happen in 7 years. We currently are at around 4,300 for S&P 500. I keep saying that we can easily double or triple in the next 1 to 3 years. Can we get a pullback before that? Yes. But we can also increase, double and then get a pullback. And that pullback could be very minor. You see, notice that since October of last year, we haven't actually even touched this green support resistance line. This is a massive move just from the perspective of, just looking at this chart. So expecting a pullback, you're trying to find the top, right? You can't, right? So an uptrend in security, this is an uptrend in security. It's basically an exercise in futility to find the top, just like it is an exercise in futility to find the bottom of a downtrend in security. We will know when it stops going down, and let me show you how we will know. You see, right there, when we were back in April of last year, how did we know it is no longer going to be going down? So here in March and February and March of last year, 2020, during the declaration of pandemic and during the ensuing panic, we did nothing. We exited. We exited on February 25th in this case. Why did we do that? So we exited because we knew nothing, and we turned off our brain once again. Even though it sounds weird, I highly recommend people do not use your logic or thinking abilities when trading. Just use the chart. You see, this is all I needed to know to make this complicated decision of exiting. 25th of February, the stock, in this case S&P 500, closed below this blue support resistance line. This is all I needed to know. Okay, and then it collapsed. So until April of 2020, I did nothing. And then we knew, okay, at this point, we are in an uptrend. So once the stock has closed above the blue support resistance, we're now in an uptrend. Again, this is all I needed to know. I turn off my brain and I buy. And this is what we did. This is what my subscribers hopefully did. They have been richly rewarded if they listen to my, tales. Notice how easy it is. We did nothing. We did no, we didn't analyze money supply. We didn't analyze Federal Reserve action. I don't even know who the Federal Reserve action, what was a Federal Reserve action back then. You see, you need to simplify things. When you're trading, and in this case, we're trading stocks, we need to simplify things. So we simplified things to nothingness, okay, to basically 4 lines. And they work wonderful. So at this point, yes, we can get a pullback. When we will get the pullback, nobody knows. How deep of a pullback will we get? Nobody knows. If I had a position back that I bought back in April, I would still be in this position. I would be holding it and just trailing it higher at my blue support resistance line. Here's NASDAQ QQQ. Identical, similar pattern, but even stronger because NASDAQ strongly outperformed S&P 500 just on a number basis. So let's say if we bought it back in April of last year, then you're still holding it because there was not yet a close below the blue support resistance line. That's a 74% gain. If we look at S&P 500, let's see how much that gained in the same amount of time. So that's 47% gain. So you can see that NASDAQ outperformed, but the technique of trading it was identical. We only looked at once we closed above the blue support resistance line right there in March of last year, and we did nothing else. We simply trailed at the blue support resistance line. Trail higher. We would still be open right now. So if you're lucky enough to be a smart guy or a smart lady, yes, just hold it. I would be just holding it right now. Also, I wanted to say that yes, we have a lot of traders that are men, and vast majority are still male, but I am noticing quite a bit of new female traders, and there is obvious differences in how men and women think. So I think that it will just depend on how you trade, but overall it actually is great for both genders to get into trading. So if you're a lady and you're trying to get into trading, now would be an awesome opportunity. And again, I can explain how it works. Everything is super simple. So at this point, NASDAQ, again, pulling back a little bit. Where would this pullback take us? Logical place for this pullback to unfold would be to this green support resistance line. Previously, you can see right there in March, previously here in May, it did find support there, did not go further down. So a logical place to for support to unfold would be around here. Small caps are already there. You can see that they pulled back towards this green support resistance line. They have closed below it. So notice right there today and yesterday, 15th of July and 16th of July, the close was below the green line. It is logical to see a continuation. So a pullback may unfold, continue unfolding. So it's another, 5, 6, 7% towards very good levels to consider buying. We will, under no circumstances, try to sell this thing short. I will only sell this thing short when and if we break below the yellow support resistance line, then bounce towards the red line. So break down below the yellow, bounce towards the red. It's not impossible, but improbable. Especially I'm hearing news about the potential passage of this infrastructure bill. So overall, unlikely we will see a strong push lower. Junk bonds. So junk bonds, once again, I'm going to show you the correlations between junk bonds and stocks. This is the correlation to the S&P 500. Notice it's mostly positive. So junk bonds broke out actually even earlier right there. If they broke out on the 9th of April of 2020, while S&P broke out in late April. So another reason why I decided not to sell short the S&P 500 is because of the way that junk bonds acted. And once again, notice that the correlations are huge. So junk bonds correlate highly with S&P 500. They trade basically like stocks, and they just made a new high. So 52-week highs for junk bonds is a good thing, because we will consider this as a confirmation of the bull market for stocks. Okay, moving on to the commodities. Here's natural gas. So I'm not going to cover every single commodity every single time. We have actually sometimes trades open, so it would kind of suck to the subscribers. This is a general YouTube video, so if you're interested, sign up. Again, you can sign up. Click the description of the video and find my website there if you need a full coverage of everything that we trade. Here, this is natural gas. So again, I turn off my brain. So notice up arrows. These are actual alerts. I don't look at any kind of chart patterns. Although on this chart, the pattern was actually quite obvious. So I'm gonna, just draw a line, and there's that breakout. So this is kind of like a cup and handle business, and there's the breakout for the cup. Do I use it? No. Why? Because up here, if I was to buy it on breakout on 25th of June, where would I put my stop? I need to put my stop somewhere. And people say, well, why don't you just put your stop, close by? If you get stopped out, you get stopped out. To me, that doesn't make sense. I want to get stopped out when the trend changes. You guys got that? So if the trend changes, then I will get stopped out. And the trend change for me for the commodities is this red line, you see. For stocks, I use the yellow line as a trend change. And again, this is a daily chart, so I don't trade stocks on anything but daily charts. So we make it very easy. But we can, yes, indeed, can trade things like natural gas futures and S&P futures and Forex, etc., and cryptos on any time frame. So in this case, our signal to buy was right there on the May 6th. And our signal to sell would be, on a pullback towards the blue line. Now, it is difficult to do this with commodities, and especially if you're trading futures. So this is a huge gain. You want to take some profits. It seems like we're kind of running into resistance. So again, this is mostly based on experience, but even without experience, you can kind of look at it and say, okay, this is the price came up, but it was sold on the 29th of June. The price came up, but it was sold on 30th of June. Again, the price came up on the 6th of July, and it was sold. So it seems like there's some resistance in this area for natural gas. Will this resistance be overcome? You can't even see it. You see, there is no lines up here. If it was touching the green line, from below, then I would say yes, there is resistance up here. But we can't really even see the resistance up there. So perhaps there is some resistance, perhaps not. What I'm looking for right now is a potential pullback for natural gas. And if it pulls back towards the blue support resistance and then kind of bottoms there, then that would be a good opportunity for us to consider selling it, to consider buying it again. Now, natural gas. So an actual trade, and this is called GasLog Partners with, I don't know why, but I just find this ticker just extremely hilarious, GLOP. This GLOP thing was from my speculator newsletter, where we trade kind of no name, or not necessarily no name, but just a breakout stock. So how do I know this is a breakout stock? So the way to know it is the stock has been in a downtrend. It has indeed closed below this yellow support resistance line. In this case, it was actually 52-week lows on top of the, closing below the yellow support resistance line. And then something happened, and right there where I'm hovering on 23rd of June, it broke out. It closed above the blue support resistance line. So again, if you don't have my lines, you can have them on the TradingView interface. They're now also available for MetaTrader. So if you need it for MetaTrader, there is a website. So at this point, I'm like, oh, this looks kind of good. The breakout occurred right there on the 23rd of June. And a few days later, I'm looking, well, this is just beautiful. I'm going to buy it. Now, if we zoom out, we can see that this GLOP thing was horrendous. Like, nobody wanted it for many years. Last time, again, it was conceivably in a bull trend up market, was in March of 2019. But since then, you can see it was just collapsing lower and lower and lower until something happened and it stopped going lower. What I really liked is the way the indicator lines were really far apart, and then they got so close together, here back in March, and then they got even closer together. So what does that mean? That means that I can put my stop, if I was to buy on breakout, I need to put my stop somewhere. So let's say this same stock has closed above this blue support resistance line back in December of 2020. I would need to buy it on breakout and put my stop at the yellow line. You see, because the yellow line is a trend change for stocks for me. Okay. This can all be explained in about 5 minutes. I have a video explaining it, but I'm just giving you a kind of like a quick explanation of how I think about trading. So if it was breaking out, if it was closing above the blue support resistance back here in December of 2020, I would need to put my stop where the trend changed, and the trend changes at the yellow line. So let's say it broke out, it failed, and it came down. That's a 63% stop. Huge, right? Very uncomfortable. But here, because of the way the lines work, I was able to put my stop at the yellow line with only a 29% stop. You see, much tighter stop. So I like when the lines come together. I like when they kind of collapse together. So what I did is on June 25th, right there, I bought calls. In other words, I was buying calls to express my bullish sentiment. I think the stock was going up at this point. The breakout has occurred into the bullish trend, uptrend, and I want to buy it there. So I bought calls. If you're not familiar with how the options trading works, so I bought calls. Calls means that I am expressing bullish sentiment. I bought each call for $140 each. So they're $1.40, you need to multiply by 100. So each of the calls contract cost me $140. So I bought several of those contracts. And then what I really liked about the way this trade went is it just went immediately almost in our favor. About a few days later here on the 6th of July, I sold a quarter of my calls at already a nice profit, $1.75. I bought them at $1.40, so 140 versus 175. It's already a sweet profit. So I sold a quarter of my position there. But the same day it continued higher, so I'm like, wow, it doubled. So I sold it at $2.50, almost doubled. So I sold it at $2.50 right there, another quarter of the position, same day. Then from then on, nothing really happened much. So it did close above the green support resistance. I did not really like the way the spike looks. See right there on the 6th of July. So I decided to go ahead and close this position. Now, it's possible that I was too early. However, I bought calls that are expiring in January of 2022. That's about half a year out. If you know how the options trading work, that means that there is something called theta, T-H-E-T-A, theta decay. So the decay of how much people will be willing to pay for your option. And the more you hold it, the more the decay is. The closer it gets to the expiration date, the bigger the decay. So this is what I did. I decided to close it early at 245 each. So I closed quarter at $1.75, quarter at 250, and then one half at 245. So overall, 65% average gain. I'm very happy with this gain. Also, if the stock market will continue to sell off, that would help me with the exposure. Now, it's possible that if it sells off a little bit further, we can re-enter again at the blue line. So we'll see if it does or not. But overall, if this makes sense to you, or if it doesn't make sense, make a comment or send me a message, and I can explain things in more detail. Here's the momentous occasion I was referring to for many months now. This is dollar currency index. So dollar currency index was on the downtrend. Downtrend started back on June 2020. So we're about a year into this downtrend. Notice big collapse. Notice a low here on the January 6, 2021 of this year, date of the insurrection. So then, ever since then, we have kind of been making higher lows, higher highs, higher lows, higher highs. And now, again, notice how the indicator lines came down closer together. So now the price had easier time of breaking out. And it did just that right there on 13th of July. This is a big deal because dollar is gaining in price. You see, people are interested in buying dollars with other currencies. If there was this scariness, if there was a lot of fear, gold and precious metals would be gaining in price, but that's a separate subject, and I'll get to it in a second. When the dollar is gaining in price, when dollar is appreciating in price, this does not mean a loss in trust in the U.S. currency, in the United States currency. It means quite the opposite. It means that people are interested in owning dollars. You see, they would rather keep dollars than euros. They would rather keep dollars than Japanese yen. They would rather keep dollars than the Swiss francs. You see? Now, this goes contrary to many of the things you hear on TV, that collapse of the dollar is near and we're about to enter this end of the world kind of scenario. I think nothing can be further from the truth. And as I just showed, I actually posted this today, again, this is a big deal. On TradingView, I just posted it. So this is a breakout, and the demise of the dollar is greatly exaggerated. You see, inflation is not going to be an issue because of the fear. Okay, inflation may be an issue because of the disbalance between supply and demand. For example, housing, there's just not enough houses, so people are asking for more money. There's just not enough computer chips, or people are asking for more and more money for the computer chips. It doesn't mean that there's going to be a war or an end of the world scenario. This is when the prices of the dollar collapse during the war or end of the world scenario, and gold gains in value. So precious metals are most likely going to continue to be under pressure. Here's silver, for example. So silver actually made a new high right there on 18th of May, and since it was just kind of really weak, and now we can see that it actually is already below this blue support resistance, and it's really close to the outright bear market. So the bear market for silver is, I'm going to read it right off the chart. If it closes below 24.84, so 24.84, I think it might there's a good chance that it will continue strongly lower. This is a kind of line in the sand kind of thing. So once again, yes, there is bad things happening out there. Yes, the pandemic is still going on. However, the way I'm reading this chart of the United States dollar as anything but the end of the dominance of US dollar. If anything, it's the beginning of the rise of the US dollar and the continuing dominance of the fiat currencies. So let's get to the cryptos now. And this is so touchy. My God. I'm getting like a lot of flack for this. I said that Dogecoin, for example, will collapse to zero. I got just killed by these comments. And now I'm looking at Bitcoin, and I put my mouth where I put my money where my mouth is, and I opened a short. So I shorted Bitcoin on 13th of July. I was able to do it through a margin account. I shorted it at 31,724. Okay. So I'm expecting lower lows and lower highs. So again, notice this clear breakdown. You see how it was bottoming, trying to touch this red support resistance line? It did it on many occasions, right? And finally, right there, where I'm hovering on the 12th, 13th of July, we saw a close below. This is a signal for me, and this is all I need to know. I don't know anything about Bitcoin other than it has done what I needed it to do. Okay, it closed below this blue red support resistance, and this is a bear market for Bitcoin. I'm expecting lower lows and lower highs. They may not necessarily happen immediately, but I am expecting them to continue lower. Okay, this also means other cryptocurrencies, as in, for example, this thing Ethereum. Ethereum also has closed below this red support resistance line, meaning that it has now entered the bear market. And no matter if you just don't like it, or if for some reason you just want to kiss this Bitcoin and just love it so much, and this cryptocurrency is so beautiful, and this decentralized finance is the new thing in the world. The objective reality is that most likely you're going to be disappointed, because most likely we're going to see some sort of a coordinated action against cryptocurrencies by the governments. Okay, if I was in the government, I would do that. I would strongly consider coordinated action against cryptocurrencies, mostly because of the way they are set up. So again, this is a big deal for people. Bitcoin, for example, uses tremendous amounts of electricity. Here in California, I live in California. Here we have shortages of electricity already. So yeah, we're gonna mine Bitcoin and have no way to cook food on an electrical stove. No, that does not make sense. So or we're gonna have, you know, water dry up in Lake Powell, where the Hoover Dam is, and we're not gonna, you know, we're gonna have Bitcoin with which to cool, with water to cool the Bitcoin mining rigs. That again doesn't make any sense. So most likely we're gonna see some sort of a coordinated action. But even before that happens, you can see that it is already happening by the market forces, you see. So the market forces have already collapsed it from 64,000 down to around 30. That's a half. And I think it will easily continue lower because of the way this chart looks. Okay, I am not in any way basing my trading decision on fundamentals of the Bitcoin. Reason being is I know nothing about the fundamentals of Bitcoin. All I know is that this chart looks bad. All right, so now that you heard it, you can't unhear it. Head over to MasterChartsTrading.com. You can look also in the description of the video, find me there. I have 3 different levels of services. So trading indicators are just that. You get these 4 lines on your chart. Now they're available for TradingView.com interface. This is a TradingView.com where I'm hovering. So these 4 lines are available on TradingView.com interface. They're also available on MetaTrader now. So MetaTrader interface, MetaTrader 5 interface, you know, the lines are also available. So you can buy them there. Now, if you need more, you know, information, for example, I have 2 newsletters, Elite newsletter, Speculator newsletter. So we trade different types of stocks in there. In the Speculator, again, we trade mostly breakouts, as in, for example, I just showed for this GLOP, GasLog Partners. It is a breakout type of trade because it was in a downtrend and all of a sudden it broke out where I'm hovering. Or we can do a pullback type of trade. So a pullback type of trade would be, as in, for example, small caps. You see right there, back in August, back in September of 2020, they pulled back towards the blue support resistance and we bought them there. So that's a pullback type of trades. Usually I trade those in my Elite newsletter. So also we have another product if you really need more. So stock screener, you can screen hundreds, if not thousands of stocks and receive similar alerts as I just showed. As in stock is breaking out above the blue support resistance and you can buy it there, and here are all the lists that are available for you to scan from, so you can, you know, customize what you receive. Okay, again, I went over and tried to kind of keep it under 20 minutes, but it just does not seem to work. If you have any questions, if you have any comments, make them below. Other than that, have another great trading week. Thanks, bye-bye.